All right, hi everyone. Welcome to today's live trading session brought to you by IronFX. All right, good to see you all tuned in. All right, before we start, of course, please take note of the risk warning and the disclaimer. Right, the products here are traded on margin and carry a high level of risk, and it's possible to lose all your capital. And so take note that the information in this webinar is not to be considered as investment advice or investment recommendation, but instead just educational material only. Right, my name is Ketan Ramachandra. So this webinar series is brought to you the special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, right, let's take a quick look at what's up on the economic calendar for this week. Right, we've got a pretty big central bank decision coming up in a few hours, and that's going to be the ECB, where they release their monetary policy statement, and followed by President Christine Lagarde's press conference as well. And then later on as well, sandwiched in between the statement released and the press conference, we also have unemployment claims and retail sales out of the US. Right, so it's going to be a uh, pretty volatile period for markets during these events. Now, oh, hang on. Right. So this is what's left on the calendar for this week, right? So as you can see here, the main refinancing rate for the euro areas currently sits at 3.65%, and the ECB is expected to make a 25 basis point cut to bring it down to 3.4%. So this is out. This statement will be released at 12:15 p.m. GMT time. So that's in a few hours from now. And then following which, half an hour later, at 12:45 p.m. GMT, President Lagarde will be commencing a press conference. And sandwich in between, right, as I mentioned, we've got retail sales out of the US and unemployment claims as well. And tomorrow morning, it's going to be a pretty eventful session during as well. A pretty eventful session during the Asia hours. Right at 2 a.m. GMT, we have GDP data, industrial production, and retail sales all out of China. Right, this is going to be pretty market moving as well, and we can also see it have a pretty strong impact on crude oil prices as well. Right, especially with GDP and industrial production. Right, if we see another miss in industrial production figures, and GDP output, right, this could weigh quite heavily on crude oil prices. And of course, then later on at 6 a.m. GMT, we have retail sales out of the UK as well. Now, taking a little slightly closer look at uh, the ECB and its upcoming monetary policy statement, right? We can see here at the prior meeting, which was in September, they made a pretty big cut, right? They cut by about 60 basis points to bring it down from 4.25% to 3.65%, right? So that's where the main refinancing rate currently sits at. But for today's meeting, they're expected to make a slightly smaller cut. They are looking at reducing the main refinancing rate by 25 basis points to bring it down to 3.4%, right? Right. That's also partly, of course, due to inflationary pressures dissipating quite strongly in the EU, right? We can see on the left, we have the chart for headline CPI, and on the right, we have the chart for the core CPI, both on an annualized basis. We can see that headline CPI has eased down all the way down to 1.8% in September, while the core reading currently sits at about 2.7%, right? So we can see inflation has moderated significantly in the EU, which is part of the reason why we can expect a second successive rate cut by the ECB. And then looking at PMI activity as well, like PMI is Purchasing Managers Index, and this is the composite PMI which consists of both the level of activity for the manufacturing sector as well as for the services sector. Now, a reading under 50 indicates contraction, which is what we saw towards the end of last year and in the first couple of months of this year. And a reading above 50 indicates expansion, right? So what was a poor end, or rather what was poor PMI activity at the end of last year and early this year, uh, switched into a pretty strong rebound. We saw PMI activity rising as high as about 52.5 in May. But since then, PMI output, right, combined PMI output, which is the composite reading, has continued to trend lower, and it has fallen into contraction in September as well, dragged down heavily by the manufacturing sector. So we can see quite clearly economic output based on the PMI levels, right, is clearly pretty weak in the EU. So another reason for moving ahead with the second successive rate cut would be to kickstart its economy as well. Now, although the forecast is only for 25 basis point cut, right? Uh, I guess you should also be prepared should the ECB make a larger reduction, right? Perhaps they could even move with another 50 basis point cut today, right? But as of now, it looks like it's going to be 25 basis point, but do not rule out 50 basis point cut, especially since inflation has significantly moderated lower, while PMI activity has fallen into contraction. Right. Now, moving over to unemployment claims, right? That's out later today at 12:30 p.m. GMT time. Right. So unemployment claims, or otherwise known as initial jobless claims, tracks the number of American workers filing for unemployment benefits. So when you have a figure that's trending higher, that's what we saw from May till the end of July, early August, right? Rising claims such as this indicate some weakness in the US labor market, right? So when more Americans are filing for unemployment benefits, it signals some weakness in the labor market, which in turn uh, has a bearish which in turn usually functions as a bearish catalyst for the US dollar. So we can expect the US dollar to come under pressure when claims are rising as such. And then since the beginning of September, or since mid-August, right? Since mid-August till the end of September, we saw claims reverse course and trend lower. So this is over this period, typically when claims are falling lower, it usually would function as a bullish catalyst for the US dollar. Now, what has happened last week is we saw claims spike higher. This was primarily due to higher claims being filed in the state of Michigan and other states, mainly Florida, that were affected by hurricane related incidents such as Hurricane Helen and Milton as well. Right. Although in Michigan, the claims surged due to layoffs in the manufacturing and management sectors, whereas in other states, it was primarily due to uh, hurricane-related incidents. Now, of course, we could see claims continue to remain elevated, right, as the fallout from the hurricane-related incidents come to the forefront, right? And we can see that the forecast for this week sits at 241,000, right? A relatively high figure, right? Last week's reading came in at 258,000, while we can see the 4-week average currently sits at 231,000. So you can see that the forecast for this week is still higher than the 4-week average, right? Which seems to indicate that we can expect a somewhat elevated reading for unemployment claims. So how can we interpret the data, right? So if claims come in higher than the forecast, right? So we have more than expected claims, right? This would typically function as the bearish catalyst for the US dollar. Conversely, if claims come in lower than 241,000, right? This is showing some resilience in the labor market, which in turn then would potentially function as a bullish catalyst. So take note how unemployment claims can have a pretty strong impact on the direction of the dollar. And at the same time, right, later on today, we've also got US retail sales, right? So you can see retail sales have been surged strongly in July, growing 1.1%, while in August it grew just slightly 0.1%, right? But we can see that the forecast for September points to a pretty decent rise or pretty decent gain of 0.3%. Right, and when you look at retail sales on an annualized basis, which is the chart on the right, you can see that since February, retail sales have been growing pretty steadily on an annualized basis as well. Right, so what this means is also if we do see stronger consumer spending, right, if we do see stronger consumer spending, giving us a result maybe about 0.4%, right, this could then function as a bullish catalyst for the dollar. Conversely, if you see weak consumer spending, that could have a negative impact on the dollar. So take note, both the US retail sales and unemployment claims, right, combined together are going to inject slightly higher volatility for the dollar. And that in turn also is going to create higher volatility for gold prices as well. So take note how the respective data points, which are unemployment claims and retail sales, could impact markets later on today as well. Okay, with that, now let's dive into the charts and trading view. And we'll begin our analysis on the dollar index, starting on a daily time frame, and then we'll work our way down. And of course, should you have any requests for any other analysis, please do drop them in the chat box early, so we have time to go through the analysis together. Right. Okay. So we'll start with the dollar index. Then we'll take a look at the euro, of course, right, with the ECB coming up in a few hours, right? So we'll take a look at the euro. We'll take a look at the commodities such as gold and oil, and then we'll cover a couple of the indices as well. All right. Okay. So we can see here since since the beginning of October, demand for the US dollars picked up significantly, right? right? Despite the Federal Reserve cutting rates on 18th of September, right, making a jumbo rate cut of 50 basis point on 18th of September, we have seen the dollar actually reverse course and climb much higher, right? It has also broken out of a very nice descending trend line here. There's a pretty decent descending. Oops, let me get this, adjust this a little bit better. Right, it has broken out of this descending trend line on 2nd of October, as well as breaking above a multi-swing high resistance at 101.77 as well. So we can see very significant shift in momentum. And of course, with the price action breaking out of significant resistance levels as well. First, it broke out of the descending trend line on 2nd of October, after which it proceeded to break out of this multi-swing high resistance on the 3rd of October. Right. So, and then we also had on 4th of October non-farm payrolls. If you guys remember, Friday, 4th of October was when non-farm payrolls were released, and we saw a nice rebound in job growth or job creation, while at the same time, unemployment rate edged lower as well. So this functioned as a pretty strong bullish catalyst for the US dollar on Friday. And you can see that momentum has continued or flowed over to the week beginning on 7th of October. And also, of course, it has flowed over to this week as well. Not only do we have non-farm payrolls on Friday, 4th of October, we also had CPI data, which was released on Thursday, 10th of October, followed by PPI data on Friday, the 11th. Now, PPI, where did we go? Wait, hang on. Where is it? This is, yeah, okay. So, uh, not only did we have strong non-farm payrolls on Friday, 4th of October, we also saw that the core readings for CPI, which was on Thursday, 10th of October, and the core readings for PPI, which was on Friday, 11th of October, show a slight acceleration in price pressures as well, right? So we can see that despite inflation pulling back quite sharply in the US when you look at CPI and PPI, but the recent data has showed core inflation start to accelerate slightly as well, which raises some concern for the Fed, right? If inflation does continue to pick up steadily, right, it puts further question marks on the Fed's ability to make further reductions in the rate cuts, right? So we can see here, we've seen the dollar index break out of a descending trend line, and then after that, it proceeded to break above a multi-swing line resistance, and then fueled by a strong ADP report, as a strong uh, non-farm payrolls. And also, yes, ADP was released on Wednesday. Sorry, I forgot about that. Wednesday, 2nd of October was ADP report. Is also another employment data released that showed a nice rebound in job creation. Then we had non-farm payrolls on 4th October showing another nice rebound in job creation. And of course, on the following week, Thursday and Friday, 10th and 11th of October, we saw core inflation accelerate slightly for both consumer price index CPI and the producer price index, which is PPI. So we can see there's fundamental reasons, right, or fundamental catalysts driving this recent demand in the dollar as well. And of course, dollar index is pushing significantly higher, right? Now, let's take a look at where the key resistance and support levels lie for this dollar index. And then, of course, we'll take a look at the euro as well. Now, you can see here there's a nice downtrend, of course, so we can run a Fibonacci retracement starting from this swing high here on the 28th of June, going down to the lowest point, which is the swing low on 27th of September. When we look at all the fibs, right, we can see the dollar index is approaching a 61.8% Fibonacci retracement. And at the same time, we can also see that the dollar index has made a nice swing low support here in mid-July, right before bouncing higher. So what was previously a support area here in mid-July could now potentially function as a resistance barrier. So we have a pullback resistance that's being identified by this swing low here on 18th of July. And in addition, we have the 61.8% Fibonacci retracement. So that's how we are identifying our first resistance barrier for the dollar index. So we have a pretty decent pullback resistance level here. We can identify this as the first resistance. And because we have the 61.8% Fibonacci retracement just slightly above it, we're going to identify this area as a zone here. Now, looking a little bit higher up, right? When I look across close to where the 78.6% retracement lies, I see a nice support level taking place here in mid-June, and after which a nice resistance taking place right at the end of July. So there's a nice overlap level that we can identify at 104.68. We can use this overlap level in the identification of the second resistance. And we also have a Fibonacci retracement at 78.6% to add further significance to the strength of this resistance zone. So we're going to keep 61 and 78.6% retracements here. Right. So this is where the dollar index is currently approaching, right? So take note, this could be a pretty strong resistance barrier here. We have a 61.8% retracement and a pullback resistance at 103.69. Right. Now, what about support? Right. We can see here previously, this level here was previously functioned as a pretty decent resistance on 9th of August. Right. So what was previously a resistance level here can now potentially function as support. So that's how we've identified the first support, which is at 103.26. Now, in terms of the second support, right, when I zoom out a little bit, there was previously a pretty good overlap level here, right? Pretty good overlap level at around 102.62, right? We can see previously in early January, this level at 102.62 functioned as resistance. Then proceeding to function as a nice swing low support in mid-March and functioning as support again on 5th of August. Of course, the wick drops pretty low here, but you can see generally the body of the candle retracing higher to close above it and finding support once more on 13th of August. So this creates a nice overlap level, right? Which then proceeded to function as resistance as well, right? On Friday, 4th of October till Tuesday, 8th of October, this level then functioned as resistance before dollar index finally broke out of this level here. So what was previously a resistance barrier can now be a potential support. So this is how we've identified the first and second support levels for the dollar index. Right. Now, let's take a closer look on the 4-hour time frame. Right. Okay, before that, of course, right. So if you do see unemployment claims and retail sales coming up later today, right? If you see unemployment claims uh, come in lower than the forecast, while we see strong consumer spending, this this result, right, would then potentially function as a bullish catalyst for the dollar index. So take note, if we see lower claims and higher retail sales, we could see the dollar index push higher and probably maybe even push as close as the 61.8% Fibonacci retracement. Now, if both unemployment claims and retail sales come in opposite, that means we see higher claims and lower retail sales, right? That could then potentially function as a bearish catalyst for the dollar index, and we could actually see this index reverse from just underneath the first resistance and probably pull back towards the first support, right? So if we do see a potential bearish reversal take place for the dollar index, right? If we do see a bearish reversal take place for the dollar index at around the first resistance or just underneath it, we can then use the first support at 103.26, use the area around the first support as a potential take profit target for any short trades that you may have. So take note, if the data works in the favor of a bearish reversal, right? If the US data works in favor of a bearish reversal, then we would be targeting the first support or close to the first support as a potential take profit target. And of course, if we do see the data then function as a bullish catalyst for the dollar, then we'll be targeting at least a 61.8% Fibonacci retracement as the first take profit target. Right, so take note of how the data is quite likely going to drive the direction of the dollar index later on today. Now let's look at it on a 4-hour time frame and see if there's a need to fine-tune the analysis. Right, on the 4-hour time frame here, we can also run a Fibonacci retracement starting from this swing low on the 27th of September going up to the current candle here. We can see the current 4-hour candle is in red and is in pulling back. So that allows us to draw a Fibonacci retracement here. Take note, if we do see price make a new high, then we're going to have to delete this Fibonacci retracement. But for now, with the current 4-hour candle pulling back, we can draw this Fibonacci retracement. And let's take a look at where the main retracement levels lie at. Right, as of now, right, I think what we've identified as the first and second support is pretty fine. That's pretty applicable as well. What I would include in is where the 23.6% retracement sits. We can see here at around 102.80. We can see the dollar index stabilizing around this level from 9th of October till the 11th of October, right? Stabilizing above this level, sort of consolidating around this level before breaking higher. So this could also be a potential support area should we see, of course, dollar index reverse sharply. But for now, right, this is something just to keep an eye on for now. But the main support, of course, is going to be at this overlap level here, or no, sorry, this looks like a pullback level, right? This looks more like a pullback support level at 103.26, right? And also we can probably run a nice ascending trend line as well, right? We got a pretty decent ascending trend line on the 4-hour time frame here, right? So of course, any break below the ascending trend line could also trigger a further bearish downside action. And if we were to see that happen, right? Remember, if the data works in favor, or if the data, if the upcoming data from unemployment claims and retail sales results in a potential bearish catalyst for the dollar index, then we are quite likely to see dollar index break below this ascending trend line or break through the ascending trend line. And if that were to happen, right, then we can then target close to the first support as a potential take profit target for the dollar index for any short trades. And of course, if the data is going to present itself as a potential bullish catalyst for the dollar index, then of course we're going to be using the 61.8% Fibonacci retracement as the first potential take profit target. Right, so these are the key levels for the dollar index on the 4-hour time frame as well as on the daily time frame. Right, okay, with that, now let's move on over to the euro, of course, right? We've got the ECB releasing its monetary policy statement in about just less than 3 hours. So let's take a quick look. I don't take a quick look, but let's take a look at the euro now. And then, of course, we move on over to the commodities. All right, so of course, right, if we've seen the dollar index rebound very strongly since the beginning of October, then of course we're going to see the euro reverse sharply, and you can see it has dropped uh almost, I would say, let's see how far has it dropped. It has dropped from this high here. It has dropped well over 3.3%, right, losing about 370 pips since the last week of September, right? Since the last week of September, we've seen the euro lose more than 3.3%, right? Dropping at its lowest point, dropping almost 370 pips as well, right? Very strong move. Now, let's see where are the current support levels. We can see quite clearly previous support levels have been taken out quite easily, right? There was a pretty decent overlap level here at 1.1111 that got taken out on 1st of October. There was a nice swing low support here at 1.1014 that also got taken out quite easily on Friday, 4th of October. Remember, this was non-farm payrolls day. Stronger dollar pushing the euro down. Then we also had another pretty decent uh, overlap overlap level here, right? We can see resistance here on 12th of March, resistance here on 17th of July, and then resistance here on 6th of August. After which we have a support on 15th of August. So at this point here onwards, this is an overlap support where we did see the euro stabilize on Friday, 4th of October, and then retrace or remain above this support level on Monday and Tuesday before finally giving way. So this was also a prior support level that got taken out last Thursday. Now, where could be the next level, right? Of course, the next support level is potentially here. There's a nice swing low taking place here right at the beginning of August at around 1.0790. Now, how we can use this support level, right, as well, right? This support level can also be used in the identification of a potential price target for any short trades, right? So if you are shorting the euro, right? If you've been shorting the euro since the beginning of the week, or perhaps even from today, right? And of course, if the data continues, remember, if the ECB cuts rates, and we also see a very dovish communication from President Christine Lagarde, we can probably expect the euro to continue to sell off. And if that were to happen, we can then target close to the first support as a potential take profit target for the euro. So remember, we've got the ECB coming up. If they make a large rate cut, and we also see President Christine Lagarde communicating a pretty dovish outlook on future monetary policy action, that could mean the euro could come under further selling pressures, and we can then use this first support at 1.0791 as a potential price target for any short trades. Now, the second support for the euro is the swing low here, taking place here. It's almost like a multi-swing low, right? If I look at it here, this level at 1.0665. So nice swing low taking place here on 26th of June, and a nice little swing here taking place at the beginning of May as well. Right. In between, I don't really see any other major support levels. Maybe there's something around here, right? Maybe we could identify a pretty decent overlap here, right? We see support here on 10th of June, and then again on 13th of June, after which it preceded function as resistance on 19th of June, 20th of June, and then support here on 3rd of July. So this is a pretty decent overlap level that we can use in identification of the second support, right? So also, of course, if price does continue to drop lower, and if it does break through the first support at 1.0791, we can then use the second support as the next potential take profit target for any short trades here. And of course, finally, we have a nice multi-swing low here, right, that I had identified earlier at 1.0665. Now, what about resistance? Right, there's a gap up here, right? We see a nice gap up here that occurred on 5th of August, and we see the euro stabilizing at about 1.0910 on 12th of August. There seems to be a pretty decent overlap level at 1.0908. So this is where we can identify the first resistance, right? First resistance for the euro is at this overlap level here, which is at 1.0908. And of course, slightly higher up, we have another overlap level at 1.0951. This is where we're going to identify the second resistance, right? And now we can just get rid of these other levels here, just tidy up the chart a little bit. All right. Okay. Let's see. We can now. Okay. So we've got the ECB coming up in a few hours. So if we do see uh, uh, the rate cut, of course, it's almost certain that the ECB will move ahead with the rate cut. It's just a question of how large will it be, right? So we do see perhaps a larger than expected reduction in the interest rates. We can probably expect the euro to fall even further. And then, of course, we're going to be targeting the first support as the potential take profit target. Right, let's look at it on the 4-hour time frame and see if there's a need to fine tune the analysis. Right, on the 4-hour time frame, perhaps what I do see over here as well, right? Maybe okay, there is somewhat of a pretty, oops, there's somewhat of a maybe some sort of intermediate overlap here, right? There's a pretty decent overlap level here, right? We can see the euro stabilizing here on 25th of July, after which it proceeded to function as resistance on 31st of July. So this creates an overlap level, maybe not the most strongest overlap level, but this is something to take note of as well, right? This level here at 1.0838 can also give us an indication of how strong the bearish momentum is, right? So if the euro continues to drop lower and it breaks through this level at 1.0838 quite easily, then it gives us further conviction that it is quite likely going to fall very close or all the way down to the first support at 1.0791. So do take note, this is sort of like a decent indication as well of how strong the bearish momentum can be, right? If it breaks through this level at 1.0838 quite easily, right, then we can definitely target the first support as a potential take profit level for any short trades for the euro, right? And then since 8th of October, right, I can also identify a pretty decent descending trend line, right? So any break above this descending trend line may indicate a potential near-term shift in momentum, right? Take note, this has been a trend line that's been respected since 2 Tuesdays ago, since 8th of October, right? So any break above this descending trend line could indicate a pretty strong shift in momentum, right? But for now, the euro continues to trade underneath this level here, and as it continues to trade underneath this descending trend line, the bearish momentum or the bearish bias remains in place. All right, so these are the key levels here for the euro on the 4-hour time frame as well, right? And let's go back to the daily time frame, and this is how it looks like on the daily time frame here. All right, so take note, we've got the ECB coming up. We've got a nice descending trend line that's been in place since Tuesday, 8th of October. We are seeing the euro approach an intermediate support level at 1.0838. So we do see a clean break below this level. It gives us further conviction or gives us a slightly higher level of confidence that the euro is going to fall down towards the first support at 1.0790. All right, so these are the key levels for the euro here. Right, then If there's let's move on over to gold. Let's look at the commodities. We'll start with gold, then WTI oil, then we'll cover the indices as well. Right, and of course, if you have any requests for any other instruments, please do drop your request in the chat box early so we have time to go through the analysis together, right? Don't wait till the end to drop your request. Do drop them in early and we can go through it as we progress, as we move along. Okay, right. Now, looking at gold XAU USD is the instrument that tracks spot gold futures, and we can see it is attempting to break above its intraday all-time high that was formed on Thursday, 26th of September, and that's at $2,685.51. So take note, this is the intraday high that was formed uh, on Tuesday, on Thursday, sorry, and the last Thursday of September. And I believe did we come close to breaching this level? This is 261, not yet. And this is 26. Okay, we came. Oh, actually, we did. Right? I think if you look at it, hang on. Let me see. If you look at it on the 1 hour time frame, I think it'll be a bit more clearer. Right? I believe so. Right? I believe we did. Yeah, we have made a new intraday all-time high. Right? And that sits at $2,685.69. This was previously at 2,685 and 69. Wait, I'm getting a bit confused. Oh, this is at wait 65.69. And where does this one? Right. Okay. So yes, we have made a new intraday high. So the new intraday high for spot gold was formed um, today on 17th of October, earlier today, rather earlier this morning today, at about $2,685.69. So this is where quite clearly the intraday high sits. And of course, we can identify this as a pretty strong multi-swing high resistance here. So this, of course, is going to be our first resistance for spot gold prices here. All right, Musa, right. Okay, there's a request for pound yen. All right, great. We can cover pound yen once we've done the commodities. All right, great. Great to see the request come in. So quite clearly the first resistance, right? When we look at it on the 4 hour time frame. Oh, sorry, that was 1 hour time frame. Yep, the 1 hour time frame. But let's look at it on the 4 hour time frame, right? Quite clearly the first resistance is going to be this level here, which is at $2,685.51 here, right? This is very clearly the first resistance for gold. And how can we possibly identify the second resistance when it's trading close to its intraday all-time high? In such a scenario, we can rely on Fibonacci tools such as projection. So we're going to start a projection from here, 0.1 on 10th of October, going up to 0.2 on 14th of October, and ending at 0.3, which is on 15th of October. Now, key projection levels sit at 61.8%, 78.6%, and 100%. So we can see quite clearly prices have already climbed above the 61.8% projection, but it's stalled just underneath the 78.6. And of course, we can see 100% projection sits at $2,702. So we can identify the second resistance at the 100% projection level. And of course, the first resistance is also accompanied by a Fibonacci projection at 78.6%. And of course, we're going to get rid of the 61.8% because it's no longer valid, right? So this is how we can, this is a good example of using a Fibonacci projection to identify a new resistance level or potential resistance level beyond the current intraday high. Right, now what about support? Right, when I look across this level here, right, I see a nice overlap level now, right? We can see previously this level functioned as resistance on 26th of September. 1st of October, you can even argue here on 4th of October, functioning as resistance as well, before gold broke higher on 16th, well, yesterday. And then after which, it proceeded to function as support as well, creating a nice overlap. So this is how we've identified the first support. Now, second support is another, I think, what looks like to be a pretty decent overlap level as well. It's at 2,659. This level previously was resistance here on 7th of October. resistance again on 14th of October, after which it proceeded to function as support on 15th of October here. So this creates a nice overlap level as well at $2,659. Now, once again, right, if the demand for the dollar is going to be strong, right, if you see the US dollar pick up strongly, right, that's quite likely going to cause gold prices to pull back further. So if gold prices do continue to pull back, right, or even as let's just say if today, right, you've been shorting gold as of today, should you be short gold currently, right, identifying your stop, your take profit target at around this first support at $2,673 is a suitable area to do so, right? It's a pretty decent support area, and you can use this support area in the identification of a potential take profit target for any short trades. Now, of course, if we do see uh, gold prices reverse, right? Let's just assume that gold prices reverse and start to climb higher, right? Maybe we see data uh, functioning as a potential bearish catalyst for the US dollar. If it's going to be bearish for the US dollar, then potentially gold prices are going to reverse and climb higher. So if that does happen, then we're going to be using the first resistance as a potential take profit target for any long trades, right? So if you do see a nice reversal for gold take place, we can then target the first resistance as a potential take profit target, and perhaps maybe even as high as the 78.6% Fibonacci projection. So you have a range, right? That's approximately between $2,685 and $2,690. So this can be a potential take profit zone for any long trades for gold. So you can see here gold has been in a strong uptrend, right? It's pretty much been in a buy the dip mode, right? You can see it's pretty much been in buy the dip mode, and even on the 4-hour candle here, right, we can spot a pretty decent ascending trend line. And this ascending trend line also intersects well with the first support. So if gold can stabilize here, right, if gold prices does drop all the way down here today, or perhaps maybe even early tomorrow, and it does stabilize between the intersection of the ascending trend line and the first support, it also helps us identify a potential buy entry, right? It helps us identify a potential buy entry, and we can then target the first resistance as a potential take profit level or take profit target for any long trades, right? So these are the key levels for gold on the 4-hour time frame as well. And we can probably run the Fibonacci retracement from this low here, 10th of October, going up to this. Where was the high? Is it here? Oops. Oh, wait, that's a projection. Hang on. It's from here, 2865.30. 286569 is the highest point. Let's pull up all the fibs. Right, we can see here on this Fibonacci retracement, we can see none of the retracements align well with the first and second support, so that's fine. Remember, when it comes to Fibonacci retracements, they are usually used as uh, an additional supporting factor. So in this case here, we don't see the retracement levels align well with the first and second support, so that's fine, right? Try not to force a Fibonacci retracement onto the analysis if it doesn't fit with a predefined support level such as this here. So that's fine, we'll get rid of this retracement. However, we can run another retracement from here, this low on 15th of October, going up to this high here, today's high, sorry. Now, on this retracement, right, we can see not only does that trend line of the retracement tool capture the market structure pretty well, we can also see the 23.6% retracement aligned with the first support, and we can see the 50% aligned pretty close with the second as well. So let's keep 23 and 50%. Right, so these are the key levels for gold here, right? So with prices pulling back, right, it can also the intersection of this ascending trend line and the first support along with the 23.6% Fibonacci retracement helps us identify a potential buy entry. So if prices do stabilize around this zone here, right, if prices do stabilize around this zone, it gives us a pretty decent opportunity to go long on gold once more. And then, of course, we can target the first resistance at $2,685 as a potential take profit target. Now, let's move on over to crude oil, right? WTI crude oil here. And we can see here crude prices have been very volatile, right? Especially since 10th of September, we are seeing significant swing lows and swing highs. We are seeing strong moves to the upside, pullbacks, strong moves again, and a very sharp pullback again, right? We can see prices going from on 10th of September. to 24 September, right, in a matter of about nearly 2 weeks, gaining almost 12% in a matter of 2 weeks. And then after that, reversing sharply, dropping almost 10% in less than a week. And then again, gaining almost 18%. And again, in slightly over a week and a half as well. So you can see very strong moves to the downside and upside, indicating very high volatility for this commodity here, right? And as of now, as of this high here, it's dropped as low, right? Coming from this high that occurred on 2 Tuesdays ago, 8th of October, to the low of yesterday, which is Wednesday, right? It has already dropped 13% as well. So you can see here very strong moves. And just as well, beginning of this week, this week as well, right? Not only did crude price WTI oil gapped lower on Monday, 14th of October, it has continued to slide lower as well, pretty much been in free fall, dropping as much as 7.6% at its lowest point. So you can see clearly for now, the bias for crude oil is still to the downside, right? It's still to the downside here. And I see a nice support level at around $68.30. There's a nice swing low support taking place here at the end of September. So this is where we can identify the first support for crude oil at $68.21. And of course, the second support is this nice swing low taking place here in mid-September. And that's around at $66.53. Now, what about resistance? Right, there's a pretty decent overlap level here, right? If I look when we look across at this level at $72.62, this level previously was a strong multi-swing low support, and we see the first swing low support taking place here on 4th of June, then on 6th of August, and then finally on 21st of August. So up till then, this was a strong multi-swing low support, which finally got taken out here on 3rd of September, and then it proceeded to function as resistance in the third week of September as well. And you can even argue here, it functioned as pretty decent support in October. So this creates a very nice overlap level. So in fact, $72.62 is a nice overlap resistance. And we can identify it as our first resistance here. Right. And for the second resistance, it's going to be this swing high here, right? There's a pretty decent mini swing high taking place here on Thursday and Friday, 10th and 11th of October. This is where we can identify the second resistance. Now, on this uptrend here, we can also run a Fibonacci retracement from this low here, 1st of October, going up to this high on the 8th. Let's see if the 61 and 78.6 can be of any use. Right, 61 is definitely not of any use, but 78 could be a potential level to keep an eye on as well. Right, it doesn't really coincide with any other major support level, but take note, it's somewhere where crude prices, WTI oil has found support, right, has sort of bounced off, bounced just above or reversed just above the 78.6% retracement, not once, but twice. It first happened on Tuesday, 15th of October. And then again, we saw it yesterday, Wednesday, 16th of October as well, right? So although there's no real support level here, but it does seem to indicate, right, the price action that has occurred on Tuesday and Wednesday does seem to indicate there is a pretty strong buying pressure here, close to the 78.6% Fibonacci retracement. So take note, this level has indeed served as pretty good support this week so far, right? So once again, if we do see crude prices slide lower, right? If crude prices continue to slide lower today and tomorrow, right? Identifying your take profit target at around the 78.6% Fibonacci retracement is a suitable area to do so as well. Right now, on this downtrend here, we can also run a Fibonacci retracement from this high that occurred on 10th of October, going down to the low of yesterday. All right, let's pull up all the fibs. We can see that, all right, the first resistance is sort of sandwiched in between the 38 and 50%. Maybe, right, I think I would use more inclined to use the 50%. And you can highlight this as a resistance zone as such. Here we go. Right, okay, so these are the key levels here. Oh, and also actually, you can even spot really okay, that's already broken out here. in this. Okay, no, maybe this is not so relevant. All right, so these are the key levels for WTI oil on a daily time frame. Let's look at it on the 4-hour time frame. Right, you can see here, okay, on the 4-hour time frame, what I do see is a pretty decent pullback support level, right, at $69.70, sitting just above the 78.6% Fibonacci retracement. So this does look like to be a pretty decent support area, right? So this was a resistance level back on 30th of September, which now can potentially function as support, which is what seems to have occurred since 15th of October, since Tuesday. This is where crude oil prices have indeed found support, and it's close to where the 100% Fibonacci projection sits. As a take note, this looks to be a pretty strong support level. So if we do see crude prices reverse and drop lower, once again, right, we can then target $69.70 as a potential take profit target. And also just probably would highlight descending trend line here as well, right? Not the best descending trend line, just a couple of touches, but you can see here this is something to take note of. So we have the intersection of this descending trend line and the first resistance, identifying a potential resistance barrier. And of course, we have the 50% Fibonacci retracement as well. Right, so take note, these are the key levels for WTI oil. Now let's move on over to pound yen, right? Musa had a request for pound yen, so let's cover that. So let's start on the daily time frame first. We can see here, right, since mid-September, this currency pair has reversed very strongly, right, reversing from 184.50 to go as high as 195.95 at the end of September. And this is a level where it once again came into resistance before pulling back slightly. So you can see first resistance seems to be around this level here, pretty strong resistance barrier here at 195.46. So this is where we can identify the first resistance. And second resistance looks to be at this overlap level here, right? We can see it functioning as resistance on 26th of April, and functioning as support on 4th of June, and then functioning as support here on 24th of July. So this creates a nice overlap level, which we can use as in the identification of the second resistance. So we've identified first and second resistance. We can also run a Fibonacci retracement on this nice downtrend here, right? Starting from this swing high on 11th of July, going down to this low on the 5th of August. Let's see if we can use the 61 and 78.6%, right? We can see 61% sits pretty well with the second resistance, so let's just keep that on. 78.6% perhaps is a level that we can use in the future, but for now, it's not relevant, so let's just take it out. Right, there we go. So we have a second resistance that's identified, that's accompanied by 61.8% Fibonacci retracement here. All right, okay. And then we can probably, let's see, we can also, I believe, run a retracement from here, this high on 2nd of September to this low on 11th. For this retracement, I'm going to try to be looking for extension levels, trying to see if any extension levels sit pretty close to any of the resistances. And we can see 127 sits quite close to this wick here, right, that occurred on 27th of September, right? So we can see there's this extension level highlighting a pretty decent resistance barrier as well. So let's keep 137% and identify this here as a resistance barrier. Now, what about support? Looking at this level at around 193.75, we can see pound yen bouncing off this level several times since 7th of October. Not the cleanest level, right? I'll admit on 7th and 8th of October, but pretty much this level has functioned as pretty good support, and that's at 193.75. We can identify this as the first support. And slightly below, right here at 192.76, this would be a second support. And let's just now look at this currency pair on the 4-hour time frame and see if we can fine tune the analysis, right? So on the 4-hour time frame, right, I'm just going to adjust here, right? There we go. First support much more cleaner here, and second support over here, right? Now, let's see. First resistance is fine. anything. I just adjust it like this. Um, there we go. Yep. Okay. So you can see here now on the 4 hour time frame, when you look at pound yen, it's actually just been moving sideways, right? It's just been moving sideways since 7th of October, right? It's been ranging approximately between 193.60 on the lower bound and about 195.71 on the upper bound. Now, it looks to have stabilized just above the first support once more, right? So we have a potential rebound for pound yen, right? It's been ranging between these two levels. So that means when it comes close to the first support, it's quite likely going to stabilize and reverse to climb higher. And similarly, as it approaches the first resistance, it could once again get exhausted around here and reverse to drop lower. Not only that, I also see a pretty decent descending trend line, right? And we can see that pound yen has also found support within the bullish Ichimoku cloud. Remember, when the cloud is green in color, the cloud itself can function as an area of support, and then combine that with this support level at 193.60 helps us identify a pretty strong support area here, right? And of course, if we do see then pound yen break above this descending trend line, right, that's quite likely going to trigger a stronger move to the upside. And if that were to occur, right, we can then target our take profit level close to the first resistance, which is at 195.71, right? For now, it just seems to be trending lower. Of course, it can continue to trend all the way down to the first support. And if it does come here and stabilize within this level, it gives us a pretty good entry point as well to go long on the pound yen once more. Right, so these are key levels here for the pound yen. And before we continue, I'm just going to launch a poll as well. Truly appreciate it if you can. Oh, someone raised his hand. See, was right. Okay, I can't seem to see who has raised his hand. Okay, no worries. But if there are any questions, right, do drop them in the chat box, right? And if you have requests for any other instruments, please do let me know as well. We still got a little bit of time. We can still go through any other further analysis should you wish. And in the meantime, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar. Okay, there's okay, Crescent, and let me see who else is it. There is a hand up by oops, Crescent, and okay, right. If you have any questions or doubts, please do drop them in the chat box, and I'll be more than happy to go through the analysis with you. All right, great. Thanks for the feedback, guys. Truly appreciate it. Yes, we can cover US 100 and US 30. We have time for that, so let's quickly get to that. All right, thanks for the feedback, guys. Truly appreciate it. All right, okay, now let's continue with US 500 and US 30 basically is DJ. Oh, guys, see, we've put all your requests right at the end, right? We don't simply don't have time to go through it, right? That's why I always insist, please drop your request in early so we actually have time to go through the analysis properly. So I think based on what we have based on the time that we're left with, unfortunately, I'm just going to have time for US 100 and US 30, right? And that's why I always request guys, please always drop this in early. Drop your request in early. Is this a weekly sharing by Peter? Yes, this is uh every Thursday at this time, right? We've got this live trading session and breaking news session every week on Thursday at the same time. All right, so let's quickly wrap up the session by looking at US 500 and US 30 would be DJ 30. So let's start with DJ 30 first. Right, we can see US equity markets trading to close to recent highs. So the all-time intraday high for DJ30 is at 43,234. So quite clearly the first resistance is here, right? And it looks to be making a bullish breakout today, right? Looks to be making a bullish breakout today. So in such a scenario, how can we identify the next resistance level? We can rely on a Fibonacci projection starting from here, 11th of September, going up to this high on 27 and ending with this low here on the 8th of October. Key projection levels sit at 61.8%, 78.6%, and 100%. Right, so with the first resistance here, close to the all-time high, we can identify a resistance at 61.8%. And we can also identify a resistance at 78.6% projection level. So remember, these projection levels can be used in the identification of potential price targets should we see a bullish breakout take place. So it does look like a bullish breakout could happen today for DJ30. And if that were to happen, we can target the first resistance barrier identified by the 61.8% Fibonacci projection. Now, in terms of support, I see a nice overlap level at 42,707. And we can see resistance here on 27th of September, and then support here on 15th of October. And slightly below, there's a nice support level here as well at 41,953. So this is where we can identify the second support. Right, so take note, these are the key levels for DJ30, right? This is the instrument that tracks the Dow Jones futures. Now let's quickly move on over to US 500. Similar story here. We saw a new intraday high being formed on 14th of October, Monday, or is it 5869.7? 587, yeah. So this looks like to be where the previous intraday high was formed, right? That's at 5,872. Right, so this is currently the first resistance here for US 500. And just like Dow Jones, it looks to be making a bullish breakout above this level today. So in such a scenario, we're going to rely on Fibonacci projection once more to help us identify the next resistance area. So we can see here 61.8% projection sits at 5,991. This can be a potential price target for any long trades. And of course, should US 500 continue to climb higher, we can then use the 78.6% projection as the next resistance barrier or as the next potential target for a long trade. Now we can also see a pretty good ascending trend line as well. And there's a pretty good ascending trend line that's been in place. Maybe it begins all the way from here, right? This is a little bit better here, right? A pretty very good descending trend line that's been in place since 5th of August. Right, and we can also see a nice somewhat like a support level here, right? When US 500 pulled back sharply on Tuesday, it stabilized at around 5,813. This is where we can identify the first support. And the second support can be identified at this pullback level here. It's a pretty decent pullback level. We can see this level previously functioned as resistance from 26th of September till 9th of October. So what was previously a pullback resistance level can now function as support. So that's how we've identified the second support as well. Okay, and let's see if there's anything else. I think this is pretty much it. Right, okay. So once again, right, guys, I please request you, right? Please do drop your request in early, right? I see there was a request for NASDAQ, China A50, Bitcoin as well. I would have loved to see this request come in early, right? So we actually have time to go through the analysis. All right. So once again, guys, please remember for the next sessions, do drop your request in early, and I'll be more than happy to go through the analysis with you. And let's see, I think there's a quick comment on gold, right? So let's just these are the key levels for gold here. Let me just go on the 4-hour time frame a little bit more clearer. Take note, these are the key levels for gold. These levels are applicable on the daily time frame as well as on the 4-hour time frame as well. All right, thanks everyone for tuning in. Right, do look out for the economic data that's coming up today. Right, we've got quite a few things coming on. Right, we've got the ECB releasing its monetary policy statement at 12:15 p.m. GMT, after which President Christine Lagarde commences a press conference that's at 12:45 p.m. GMT. In between, we also have US initial claims and retail sales that's at 12:30 p.m. GMT. So take note, it's going to be a pretty eventful evening, right, or early morning, depending on where you're from, right? So take note, it's definitely going to be pretty high. We can expect higher volatility later on today, right? We've got US retail sales, unemployment claims, as well as the ECB's monetary policy statement. All right, thanks everyone for tuning in. I wish you all the best in your trading journey and catch you all at the next webinar.